this is what I was looking at a couple of days ago on Sunday. I was looking for a slight down, take the lows, come up, take the highs, then head all the way back down to start to test the breakout, basically. So I'm still in that mindset, even though I don't know if it's going to happen or not. We have to see. But we've just had a big dump. We've just had a big sell on Bitcoin, haven't we? That Satoshi-era whale, as I mentioned to begin with. Where did I mention it? Where was it? Crypto Rover. What was his name again? Crypto Rover. This guy. He posts a lot, doesn't he? It was 6 hours ago. Here it is. The Satoshi-era whale who holds 80,000 BTC has just sold 9,000 BTC worth $1.06 billion. And so that's what's happened here. That's what we're experiencing, is a market sell. They usually get reversed, and then we have to see, like, we're looking for a range to form. That's my first thought right now. Let the range form. Okay. And so let me just pull up my levels, just to have a look at them. Let me just check them to make sure there's nothing. Oh, so yeah, so we're in a daily level now. We've just gone through it like it didn't exist. This daily level, see that? So that's our support level right now, which we've just smashed through it. Any epochs? I'll have to look at. Let me just kind of have a look and just make sure that everything's up to date correctly, because it's really important to see where the liquidity is. So, it's slagging, isn't it? The nearest epoch is here. 110940. Do I have that marked? Yeah, I do. So that's correct. Let me just have a look at the single prints as well, because I think that's important too. Because usually what happens is the price comes back down to fill single prints. And there they are. We've got these buying tails, selling tails, but this is the block that we want to fill, this single prints, this and this one. So let me just mark those out, because I think that's going to be your biggest support level right now, these single prints. 2 1 1 3 286. So we have a block of single prints there, and then we have a block of single prints just underneath it. 109,744 to 110,552. And so basically, if you don't know what single prints are, when the price moves up and there's no volume, you create zeros, 0 0 0 0, and they're called single prints, or like one digit volume. Yeah, like no volume, zero volume. Those get filled. So as the price comes back down, it fills, and usually when it fills, that creates, it's like a gap that's formed, and that as it fills at the bottom of the fill, that's your support level. Okay, and so the bottom of these SPs are support levels, but only if you can get into them. So sometimes the price doesn't get into can't get into the single prints, but generally speaking, you use single prints as levels for confluence when you're trying to create areas of interest where you want to buy and sell. That's the theory. And so it's good to know where they are and mark them out. And you kind of need advanced tools like exo charts to see them at ATAS or exo charts. So I mark them out. All traders usually mark them out because they're good. They work really well. And then you just kind of create your levels here. 113, 286. So there's your first block, and then the second was 109,744, and then it goes all the way down to 110,552. There. So those are your single prints. I'll put them in their own little folder. Okay, so you have your levels, you've got your single prints, your volume. Let's just check the volume as well, see if there's any significant changes in the volume. Now I'm still using the old range, which is this overall, this kind of this higher range, but I also kind of look at the volume up top as well. So all the way back to wherever I kind of started drawing these, probably there. Slight change, not big difference, slightly higher. The value area lows dropped, kind of adjusted a little bit. And then what I'll also do is just have a look at the volume up here. So we are kind of in a range here at the moment. We're still in this a very local range. I'll mark that off as well. And I'll call it local range, value area low, but I'll rename it to local val. And then you've got your local. So we're underneath the point of control. It's pretty bearish right now, isn't it? Looks pretty bearish. So we've got that. And then I'll just mark that out as local volume. Let's just put it together and let's have a look. Local. I've got two locals. Let's rename that. Higher. Okay. And that's it. And then the only other thing that I'm missing now are the fibs. So the fibs are important too. And what I'll do is I'll just take it from this pivot low here all the way up to that pivot that we've just put in right now. I'll do a full fib. Okay. So effectively what I'm seeing is the best area for support right now, clearly, is this 50 fib, isn't it? Is here. Clearly. You can see it for yourselves. Why? Because it's a back test of the value area high of this range, which we haven't had a back test yet. And it's the 50 fib. So it's a natural fib area, like the middle of the channel is a natural area for the price to bounce at the very least. And you've got you're surrounded by these two naked daily points of control, one above, one below. Okay, so maybe the one below might not get hit, but the one above probably will get hit because it's in the middle of these single prints too. So you're looking to fill these single prints and you're looking to come down and fill this single print too to bounce. That's your buy zone. This is it. This is your, honestly, that's probably the best buy here for a long. If you're looking to long BTC, it's probably the best area. So I'll kind of get my now you need a reaction. This is really important. So a lot of people don't understand that. And so what you would kind of want to see is you kind of want to see the single prints completely fill, ideally. So somewhere there with quite a wide stop, probably initially you'd have quite a wide stop. And then once you get a really nice tight invalidation, you could kind of tighten it out. Okay. And then you wouldn't preset, you would you'd wait for a reaction. So the reaction would be once you see the reaction, and then you'll be targeting 130,000. I think that's my target. That's basically your trade plan. If you get this kind of reaction off that area of interest, and once you get the reaction, you could take a long and you can have a really nice invalidation there, and you're not expecting this now, are you? That's why you'd get invalidated, because that's an area that when you create a analysis like this, you're expecting the price to react here, and you're expecting that to be the reversal zone for the price to go right back up, at the very least back to test the high. You know, even if this will go up to 130, you're looking for it to go up, like, you know, to create some kind of topping pattern at the very least. So I think that's the best area now for a long. And it kind of coincides with what I originally thought, which is the same thing, which is the breakout level. Now, I just made that up just because I thought, why not? Why would we not go back and test the breakout? And now that we have a little bit more data, I can see that actually the breakout level is a really good level because you have a 50 fib retrace, you have the single prints, which can be filled, you have the value area high, which is kind of shifted up slightly, and you have one of these naked daily points. You've got a lot of support there. What you don't want to see is this. You're not taking a long if the price just does that. Does that make sense? You would never take a long if suddenly that area just, the price just sliced. That's why you don't preset, because for reasons that you can't explain, the price can slice through areas like this. The price can do anything, can do whatever the hell it wants. Yeah. So what you want to see is a reaction. A reaction is going to be, yeah, the price goes down and it bounces. And so you're not going to get maybe the best entry, but you will have an invalidation. And the most important thing is the invalidation. If you enter a bit late, it doesn't matter. Your stop's going to be pretty much the same, and you're still going to risk the same amount. You'll just have a clean invalidation, because then you're not expecting this. If that happens, you're out. That's why you have an invalidation. Yeah, because that could happen. That's the thing. You have to assume that the price, even though you've got a really nice juicy area where the price could bounce and find support, the price could also bounce and crash. You have to be prepared for both scenarios. And so therefore you need an invalidation to prevent you from suddenly finding yourself crazy underwater if shit like that happens. And so effectively that's your trade. And then you would take it to the first resistance zone for the first take profit. In this scenario, probably wherever you took the entry, probably there'd be the value area low, because for reasons that you can't explain, the price can also bounce here, go up, find resistance and continue. Can totally do that. Yeah, the price can do whatever it wants. So you have to be aware of what the price can do, and therefore you have to take profit, then you have to set to break even, and then you're in a risk-free trade. If you get the bounce, you take the trade, you have a really nice invalidation, you take your profit at the first area of resistance, and then you are trying to run the rest of the trade up to 130k, which is what I think the destination is for Bitcoin, the target. Yeah, so that's kind of where I'm at when it comes to the next level of support. This is looking really bearish. It's kind of doing what I imagined from Sunday's stream, isn't it? It's kind of doing what I imagined. And so let's see if that plays out. If it plays out, you're going to say, Amir, you're a fucking genius. I'm not a genius. I just giving you an idea of what could happen. That's all. It's a balance of probabilities. I'm just going for the highest probability. Yeah. But I could be wrong. And I'll tell you why. Because, like I said, the price can do. Let me just put that for long. And what you actually do, and I'll just give you, I'm educating at the same time. Yeah. So it's good education, isn't it? What you could probably do is like, oh, one of these single prints, you would maybe this one here, the top of the first one, because you really want to see this 50 fib here. If you go down, you want to see it. I mean, you could always get front run. So maybe the bottom of this first one, you set an alert, and then on the alert you put a message, and first SB field, look for reaction and long. And then you don't even have to look at the charts. You have your alert. If it triggers, then you start looking at your charts, and you know you're in the right zone, right area, and then you're looking for the price action. And ideally what you'll be looking for is for the order flow to see that there's bullish order flow, i.e. trap shorts. You get a lot of people shorting in the lows, and then that's kind of what you want to see. So what you can do is you can just hide that now. And the other thing is, like here, even though I'm imagining that it can go down, it's also, you see, this is the thing, you have a balance. It's always a balance of probabilities. We could actually be stuck in a range here for a while. We could just be like here. We could just go sideways. There's no reason to think that we can go, we're going to go down. We could go down, but we could also just go sideways. Yeah, we could also, like, we're at the bottom of this local value area low. If the price kind of goes down, it comes back up, and then kind of goes down and it can't go down, you could actually end up doing, you can actually just end up right back up there. Yeah, you can just go right back down again. Like we can start put volume here exactly where we are to form some kind of something, flag or something. We can do that. It's possible. Yeah, so there's no reason to think that this is going to go down. It's just you have to be prepared, and that is really the best place to long. It's the highest probability long if you get a reaction. If the price doesn't do that and it goes down here and it goes up and it starts to come down and forms a flag and then it goes up and then maybe you get a breakout like that. It'd be a very different looking chart. But if it starts to do that, then actually you can still plan a new trade. You wouldn't be bothered so much about the lower prices then. You'd be thinking about, okay, the next swing failure of the lows. You could take that long, looking for a breakout to the upside after you see the price ranging here for a bunch of days. Yeah, so that's kind of two ideas in the context of where we are now. Yeah, and they're both longs. You could short too, and that's the other thing. Like, just because I'm imagining longs, you could short too. Let me call that range bound. You could just short, like you could just, like, here, look, if it just go back up, I think the local golden pocket, wherever the pivot's put in, shit, did that wrong. In this context, it's there. I think it's a bit too high. It'd be nice if the price actually went down lower and you ended up with it'd be too low there. Let's say the price goes down, gets back up there. Yeah, you'd be looking for a golden pocket short, reaction off a golden pocket, then you have a invalidation because you're not expecting the price to go up. That's your invalidation initially, but then you could form a local invalidation, and then you'll be looking to short it all the way down to your area. It'd be like something like that. You look something like that, but really that kind of short, you're looking for a reaction off the golden pocket, then you'll be looking to take it to your target, which is the value area high here, and then you're looking for a short. So you kind of map out what you think could happen, shorts and longs, and then see what happens and set your alerts. And then if it happens, you've got to take the trade. Otherwise, what's the point? So that's kind of Bitcoin at the moment. I'm still thinking 130. But we could be back. We could be range bound here for a while, forming some kind of range. And actually, that's kind of what we want. I think for altcoins, what we need the price of Bitcoin to find support and to just kind of go sideways. And so in my mind, going down to 111, finding support, going sideways, ranging here would be an ideal situation for some kind of meaningful mini alt season. That's Bitcoin. If there's no questions, Meron Kidan, hi, how's it going? Good morning. ETH. Yeah, I can have a look at ETH. So ETH is looking stronger than Bitcoin right now. Wow, you see, look, ETH BTC, I had it maybe going down. It went down a little bit and now it's kind of come back up. So the range here on ETH BTC looks a little bit more like this at the moment. Potentially a pennant here. So that's actually quite bullish, isn't it? If we're forming a pennant here. If BTC is forming a pennant here, that's really bullish. It does suggest to me that the eyes or the highlight or the is on the altcoins. Like now is kind of maybe is the alt season moment where Bitcoin kind of does nothing and you get a bit of transfer of value into the altcoins, and maybe Bitcoin, all it needs to do here is find a little bit of support. And yeah, I'm not going to go crazy into ETH because ETH is looking good. It really is. At the moment it's looking good. We're above the previous high. As long as we don't lose that high, Even if we go down and just kind of stay here, we're just range bound here, and then we have a chance. ETH has a really nice chance to break out for this high here, 4,000. I think that will be the next target if ETH manages to break out. Probably, just looking at it now. Yeah, we're above the golden pocket, aren't we? Look, we hit the golden pocket here once, twice, 3 times, 4 times, rejected, and look, we're back above the golden pocket. So actually, this is a really good place for ETH to be, consolidating above the golden pocket after it's tested it, and it's like now this is the back test of the golden pocket. You form here a little bit of a range, and then we can break out probably to the upside. When Bitcoin goes to 130, you'll probably end up with ETH pushing all the way up to $4,000, which is not the all-time high, but it will be this high here, and that's kind of where you're looking. That's your target. I don't think you'd be looking for higher. That would be your natural target, would be these highs here. Yeah, you wouldn't be looking for the all-time high, not in one go. You'd be looking for these highs here. So what you're looking for now is just you don't want to lose this golden pocket. And so a bearish scenario in ETH here would be to kind of just fall back down and lose that golden pocket. That would be really bearish. This is bearish. At the moment,